Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our weekly segment on investing. Chris, good morning.
Good morning.
Thank you for coming back here.
Glad to.
So Chris, all right, we'll soon be turning the page on the first half of 2022, and I imagine not too many investors will be sad to see these months in the rearview mirror. What do you think investors should do to prepare themselves for the remainder of the year?
This is a good time for investors to review their investment plan, paying special attention to their performance expectations, asset allocation, diversification, and the impact that volatility has had on their decision making.
So, let's start with performance. It seems pretty cut and dry. It's generally been terrible this year. People want to know when it's going to get better.
Yes, I understand, and we all want it to get better, but nobody has a crystal ball. And what we do have, though, is information that will give us a good historical perspective on the performance that we can kind of expect. So and that will help us to also control our behavior and how we react to the investments. This is, we're going to look at an analysis, and this is by JP Morgan, and it's going to look at time, diversification, and then the volatility of returns. And in that, we're going to look at the wide range of returns of stocks, which are in green, bonds, which are in blue, and then the gray is a mix of a half stocks, half bond portfolio. And this is going to be information from 1950 to 2021 that we're looking at. And it's going to show us some of the volatility that's been included in that. A lot of times people think that a good return on stocks is going to be about 10%, and they'd be right on average. But we also need to consider that over a 20-year rolling period, that return on stocks is actually 11.5%. And then when we contrast it to a 10-year period, it's only 9%.
And, those are averages, but we're a long way from 10% return so far this year.
We are a long ways away. But what we can use is this information and analysis to kind of see what the range of returns are. So if we look at stocks on any one-year rolling period, we'll notice that the returns can be as high as 47%, and they've been as low as 39%.
And I remember you often mention that investors like gains, but losses hurt a lot more, often causing them to make poor investment decisions in times of stress. That's me, definitely. Is there anything that they can do to minimize the downside?
Right. Finding the right mix of stocks and bonds is one way to help minimize the risk. And in doing so, when we look at the analysis again, a 50-50 portfolio now has a range between, on the upside of about positive 33%, but the downside is only 15%. And that's adding those bonds has helped us to minimize the volatility of the portfolio and the potential losses there. Now, it is a little different in a year like this year where we've got a rising interest rate environment, because it's important for investors to remember that they can still suffer losses in bonds because of it.
So it's important for investors to understand the range of returns they may experience over different time periods. What else should be part of their mid-year review?
Well, I know we're getting short on time, so in our next session, why don't we talk about how investments can come together to help minimize the return of or help minimize the risk of the portfolio.
Okay, that sounds fair. I'm excited for next week then, to be continued.
All right.
And thank you. I'll be looking forward to it. And Chris, we always appreciate your time, and to learn more about Endeavor Private Wealth, visit endeavorpw.com.